Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short Term Trading Live with Oscar's Friday Roundup. Well, we talked about a couple of things this week. I wrote them on the board. We'll go over each one. We also had a great week trading in the mini S&Ps. If you guys were following us, the large, the mini, the NASDAQ, we had nice trades. We got out near the highs. We got in near the lows. And on the trades that didn't hit, the direction was perfect. Maybe, I can remember a couple of trades off the top of my head. One of them, we were looking to buy S&P at around 1432.5, looking for 1448. The low was 1434, and it went to 1449. I don't know if I remember any other trades from this week. I already had a day off. I'm letting that out of my head by now. The batteries are recharging, I'll tell you guys that much. I had a great day yesterday. I played the drums a lot, played a little bit of golf, had a great time, and I feel great already. It's only been one day off. I bet you give me a week off, forget about it. I'll be a whole new individual. Anyway, let's get on to a couple of the lessons that we did this week, or at least the little tidbits that I threw out for us to discuss on the Friday Roundup. The Omni, Oscar's Market Navigational Indicator, that has been fantastic for us. As you guys know, its direction has been just right upon right after right after right. When it's wrong, I've only seen it wrong since I started doing these videos for you. I've only seen it wrong 3 or 4 times with actual direction, maybe 5 where the direction was just totally off. Getting stopped out's a different story. Hey, everybody's going to have their trouble trading. Nobody's 100%. But I think the Omni, out of 85 videos, I think its S&P direction maybe has been wrong for 5 videos. That is an unbelievable track record so far. You guys can go back and take a look if you want. You'll see what I'm talking about. And in fact, if you are going to go back and study my videos, something I always mention, usually at the end of the videos, but now that we're on the topic, if you're studying my videos and you're looking at video date 4607, and you see my trade recommendations behind me on the board, you need to go look at the flash updates database, or you need to look at the flash updates that went out on the same day, 4607, let's say, if you're doing this video. You would need to look at the flash updates for the date of the video and the video itself and see where we got out of the trades. Just looking at the videos and going back and looking at high-low settlement charts are not going to give you an accurate reading of the work that we've been doing here. Omni makes the calls. We get in, I get us out. Lots of times I don't get out exactly where the profit objective was. The only way for you to know that is to get on the Flash Updates database. Simply go to futurestraders.com, fill out the registration form. That puts you on the Flash Updates right off the bat. All right, enough of that. Indices. We are in the trading area where the market must prove itself, else I expect major downward pressure. Now, let me explain that. I mentioned earlier this week in my videos that we're likely going to start to turn around now and head towards new highs, and we did, so we were right on the call. I also said that if we don't make new highs and run away, we have serious downside. In fact, I think I said something like, we're going to come down so hard your pants are going to fall off. Well, I still feel that way. If we don't take out these highs and continue into the 1470, 1480 zone and make a new trading level, we're going to go up near the highs. We're going to maybe make a slight new high without follow through. We will get murdered on the downside. This market is a classic setup. Right now, I can't give you the exact indicator that would show it to you because everyone's got their own way of looking at markets. But I am telling you, 25 years experience tells me if we don't take off the new highs up here, we're going to have a hole punched in these indice markets in the next couple of weeks, week, 2 weeks, somewhere around there. We need to make a new high. I'll tell you that right now. Follow me on that, guys. You'll see what I mean. That's something I've learned over the course of years of trading. When a market gets into a frenzy like this, and it made just about a new high, and then it came off a little, and it's ready for more new highs, if it does not make much higher highs and go to a new level, it's getting ready to do a lot of work on the downside. Again, don't exactly know how to show that to you, except for once it happens, you'll say, hey, Oscar, that was pretty good. How did you know that? And then we can get into it, because no one knows if that's going to happen for sure, but that's what I see going on. If we don't go, and I'm not the type of guy to say if we don't go up, we're going to go down. You know that's not me. I give you hardcore recommendations where I want to get in, where I want to get out, and where I think we're going every day. I'm telling you now, over the next couple of weeks, if we can't skyrocket out of this area, we're going to do a nosedive. That's my thoughts. Slightly long-term in the S&P. Wouldn't matter if it was any market. I'm giving you what I see for any commodity market, what should happen by the setups that we've been looking at for the last couple of weeks and months. So it's interesting. Let's see what happens with that. Remember at all times to use the Omni as another confirming indicator. You use me as an indicator. You use me as a trading tool. But you shouldn't use me as the exact spot to buy and the exact spot to put your stops and the exact spot to get out. Because if you can't do the homework yourself and use me as a gauge to see whether your work matches my work, and then maybe we have a buy for the day if we're both jiving on the buy side, you're never going to learn how to do this yourself. And you're going to be relying on me, and if I'm not here, you'll be relying on the Holy Grail system from someone else, and you'll be going from seminar to seminar, and you'll be looking for the thing that tells you where to buy and sell. I've never found it in my life. I am the closest thing I have ever found to somebody who can help me buy and sell these markets correctly. So I'm sticking with me. Me and Omni. We're the guys who can help you, and I'm not touting myself here. Go back and take a look at the track record. Again, I've been doing this for a long time, guys. This isn't brand new. It's not a new walk in the park for me. It's not like, oh, let me see if I can throw out some YouTube videos and see if I can call the markets. This has been me. This is my life. This is who I am. And I've offered this to you guys. The way I talk about bridging the gap. You know, it's rare to find an audience like you guys that have participated in my trades and have participated in my forum and send feedback, and it's all been good, guys. It's been fantastic. There have been no evil emails out there coming towards me, and I hope not to get them. If they do, hey, I'm like stone. You couldn't hurt me if you beat me over the head with a stack of emails. But the emails have been fantastic, and a crowd like you, I am so proud to be standing in front of day after day and giving the work I give, because you guys actually trade it. You interact with me, you tell me where you're getting in, you tell me where you're getting out, and to be honest, you guys are braver than half the people I worked on the trading floor with. Half of them guys never put a position on to see where the market was going to go. They just traded momentum and that was it. You guys actually stand there and say, I think it's going to go up today, I'm going to put a long on, I'm going to ride this thing a little bit. That is fantastic, guys. Keep up that work. Speaking of the floor, I won't have much to say about this. I'm going to say it in a sentence. I'll say something brief, and then, we'll let that go. I've been trading a long time on and off the trading floors. This badge tells you that I certainly know what I'm talking about when I throw you these little bones about what you should and shouldn't do on floors where traders trade. Never, ever actually, let's go back. Never place an MIT order in a market where humans are filling orders. I tell you guys at all times, place your orders on an MIT basis, right? That's the E-mini S&P because that's our main trader. You can place an order in the you can place an MIT in the E-mini and not get slammed. Nothing will happen around that MIT except for it will or won't get filled, and that's that. If you place MIT orders in markets where humans fill them, sometimes you don't get. It's a different environment. In the electronic market, everything just goes like this. When you put an MIT order in where humans got to fill it, they have to grab that order and they have to react. It's sort of like you put them under pressure. You've given them a contingency order. They have to act differently usually when it starts to get hit because they have to be right. They have to fill you right away. And you put an MIT, which means market of touch. So if it hits your price and skyrockets, these guys are in a panic because they need to fill you. So if you place an MIT on the floor, you're putting those guys under pressure. So, place your MITs in the electronic markets. Leave the guys on the floor to fill your limits and your stops and your normal orders. It's very difficult for them to fill MITs. So keep that in mind. All right? That's about all we'll say on that one. Never, ever trade the day prior to a major holiday. You showed me, I proved that to you guys on Thursday when I said there is no way I'm going to give out recommendations to trade because I wouldn't take them myself. I didn't leave a gold rec out there because if there is going to be something that the world's going to grab if a disaster happens on Thursday into Friday when there's not going to be a market open, it would be gold. The setup looked good. I threw it out there, but I never, ever, ever start jumping in and out of these markets. I Barely ever have traded in my whole career the day before a major holiday. Things will happen. There's times I've been in the pit the day before a holiday. Most guys don't even bother coming in because we don't get too many days off when you trade in the pit. Markets are almost always open. If we know there's a 3-day weekend coming up, most guys say, hey, it's Thursday, I'm not even coming in, or I'm leaving early. That leaves the market susceptible to big price swings. Ooh, they go up, sometimes they come running back down. There were times in the pit where I'd come in and say to my boys, all right, guys, you know what? It's not going to be a busy day. Here's a couple of dollars. Go get some food. Go get some drinks. Let's hang out by the booth. Let's have a little celebration before the holiday. And the market would go crazy. Yeah, we'd go fly into the upside, hit a bunch of stops, go run into the downside. And we're all like, oh, what are we doing? Everyone's filling orders. No one's expecting it. The crew is a skeleton crew. And you get murdered on days like that. And I am telling you, every time I've ever seen that happen, it was the day before a major holiday. So keep that in mind. If you're going to trade the day before a major holiday, you're going to be susceptible to some major price moves in certain markets sometimes. Turned out that the silver and gold didn't do much the day before Good Friday when the markets were closed. However, that's not always been the case. And those are the markets I used to stand in, so understand, I know what I'm talking about here. Be careful trading the day before a major holiday. In fact, if my analysis is not set up clearly the day after a major holiday, I don't trade that day either. Definitely the day before, I don't trade. That's my advice to you. The day after a major holiday when markets were closed, if the analysis looks incorrect or if it looks strange to you or you can't get a good gauge, let that day get away from you as well. The markets will be here on Tuesday, Wednesday, Thursday, and Friday, and every other day the week after, and every day that you wake up, unless it's a holiday. These markets are here. You do not have to be in them every day. I don't have to. I have to pay attention 24/7, even on days off, but I don't always have to be in. So, another little tidbit from my 25 years. Take it any way you want, but I'm telling you, I've already done the work. I've ran down the hard road, and I'm offering these lessons to you. So heed my warnings on some of this. It's real good knowledge. Always, always, always stick to your guns. Maintain your plan. Steadfast. You came up with a trading plan. You had stops that you were going to place. And first, of course, you placed your stop. You placed your buy order. The market came and hit your buy order. If it starts heading towards your stop and you start moving that stop, you're almost asking for the emotions to get you involved enough to throw your stop into the mercy of the buyers or the sellers, depending upon what day we are up or down. Point being, you must stick to your guns. And ladies and gentlemen, you're watching a guy who says things to you and then does them before your eyes. As you see, I stick to my guns. I don't trade the day before a holiday. If I put a lesson out here for you or a bit of information that I'm sharing with you, rest assured that is the way I trade. I do not break my routine. You will not find me telling you different things next week than I've told you this week. This is me. This is the way I trade. Yes, everybody adapts their trading style. Any good trader adapts their trading style when the markets start to do something dynamic. And you've seen me go from 4-point stops to 10-point stops in the last couple of months because we used to have a nice smaller range. A couple of weeks ago, we had that smash to the downside, and since then, stops have to be larger because volatility is larger. Go take a look at options volatility. You'll understand why I've raised my stops a little bit. And, you know, for you guys in my forum, speaking of stops, for you guys in the forums that are writing that you think stops are too large the way I trade, let me tell you, and I've said this in the forums, and this is how I feel. I don't care what you think about your knowledge, how much you've studied, how well you think you have it down. If you step up to a Major League Baseball park and you got your little minor league bat or your little league bat, that's the stop I'm referring to, they are going to knock you out of the game. I guarantee you that 9 out of 10 times, if you step into the S&P, which is the brass ring, it is the Major League ballpark, and you step in there with your little league bat from the days of old when you were a kid, they are going to use you like you are baby food. And that's the way it works. And I know if you guys are listening, you guys with those $2 stops, you must get stopped out 8, 10, 12 times a week. If you're following me, tell me the last time you seen me get stopped out unless the market turned around and was wrong on that day. Now that's important, and I speak to a lot of guys on my forum about it, and a lot of guys will write to me, and if you are not putting your stops in the spot where if the market hits your stop, generally should mean it has changed direction and is going a different way for the day, you're probably using too tight of a stop. I look at standard deviations. I look at all kinds of things before I place stops. I look at where markets were. I look at where I think they're going. I look at volatility. I look at volume. I look at everything before I decide to even enter into a market. As far as stops are concerned, in my mind, I have standard deviation levels that I'm putting my stops above. Doesn't matter what the market is doing. Doesn't matter what your opinion is. It doesn't matter what even my opinion is. After I do my homework, my work tells me you better have stops here if you want to stay out of the trouble zone. That is where my stops go. Sometimes they're $10, sometimes they're $5, sometimes they're $2. I don't know where the market's going. You don't know where it's going next either. You have to move when the market moves. You have to be dynamic when the market's dynamic. But you have to know better than to step into a gunfight with a Bowie knife in your hand. And that's no other analogy I can give you any better. You get called out to a gunfight and you show up with a Bowie knife in your hand, you will die at that fight. Well, you step into the S&P with a 2-point stop, and unless you're extremely lucky, you're going to lose your money on that day. Remember that, guys. Place your stops in areas where you must be wrong if they get hit. Otherwise, you're just leaving them to the mercy of the traders. Mike, do you remember anything else I gave out this week? I know we are certainly going to talk about the Japanese yen mirror image, and I also have found another one in the euro currency. In fact, it wasn't exactly me who spotted it first. It was a couple of traders who are with me, and you guys know who you are. Thank you so much. They pointed it out to me. I gave them a shout out in the last video. I don't want to embarrass you guys, so I won't do it again. However, it's a fantastic look. And then, you know, you guys told me about that one, and I looked at it. Well, a friend of mine called, another trader who follows us from Michigan, called me, and he said, "Hey, Oscar, you have a double mirror image on the euro currency chart. I've never seen that before in all the years I've been following double images. I'm going to throw it on the board. We'll look at it together." So let's go take a look at some charts, and I'll be back to you in just a moment. So here we are. If you remember the beginning of this week, Sunday night into Monday, we had a mirror image formation building. I told you guys it wasn't exactly perfect because the highs and lows weren't the same, but it was close enough, and close enough is all you can really get in this industry. It's not an exact science, so there is no perfect formations, you know, so we get as close as we can. Well, anyway, here we go. We had mirror image, leg 1, leg 2. If on day 3, the market moves into the middle of the range and then goes out into a direction, follow that direction. Well, day 4, day 5, day 6, day 7, day 8. We did get 2 great days out of it. Boom, boom, boom. And that's what I say we look for because we're short-term traders. At least the first 2 days you can take it on the downside. So after the 3rd day, you had 1, 2, you had a nice downward trade. That worked. The mirror image formation of the yen worked. Look at how it works here. Mirror image, boom, run away. Look at how it works here. Mirror image, down, boom, run down. Here, you only got 2 days out of it. These 2, you got more. And then here, boom, boom, you had 4 days so far. So far, so good. Now, I want to move over. Okay. This is the euro currency June chart. Last week, coming into... Well, actually, it's still this week, isn't it, Mike? I can't call it last week. Today's only Friday. This week, just a few days ago, we had a mirror image formation right here. Look how perfect you have. An opening, a drop, a close. An opening, a rally, and a close. Almost exactly the same highs and lows. Perfect. Leg 1 and leg 2, absolutely perfect. Leg 3 came in and showed us that we're likely going to move higher for 2 days. Well, you want to see something really interesting? Move to this chart now and take a look at this. We have mirror image, open, drop, settlement, open, rally, settlement. Then this should be leg 3, open, rally, settlement. Well, look what it did on leg 4, open, drop, settlement. We have a double mirror image. I've never seen it before in my whole life. A double mirror image. Or maybe I just haven't noticed it. I haven't traded one. I think it's going to be really exciting when we see where we come out of this Euro currency trade on Monday. Sunday night into Monday. Mirror image, mirror image. If it comes out on the high side, it's probably twice as powerful to the upside as what we would normally get on one mirror image. So if we come out to the downside, boom, we'll go down here. If we come out of this mirror image to the upside, I say you take the projection like this, you take both mirror images, you flip, and you get out somewhere up here on your flip. Very simple analysis right there. It's as simple as that. I am going to easily use this for a projection. That's not going to be my only means for a projection that day, but simple analysis would tell me that this would probably be a level where you'd get out. That's above 135, 136 maybe. That's very, very interesting. So I think I've given some decent examples of these mirror image formations. I would like for you guys to come back to me, do your homework on currency charts where I see them happening, mirror image come up more than in anything else lately. So go look at currency charts, go look at the NASDAQ, look at the S&P, any chart you really, that turns on your interest to trade. Come back to me with your mirror image formations and let me check them for you. I find it interesting that you guys are spotting them before me lately. I love it. You guys are really learning. This is just fantastic. Keep up the good work, guys. Keep showing me what you find. I'll keep comparing them. When you're right, I'll certainly put it out on the board for you. Okay, I wanted to remind you guys I'm doing the Money Show in Las Vegas, Nevada. It's going to be at the Mandalay Bay, the Money Show, May 14th, 15th, 16th, and 17th. Please come on down, guys. Come visit me at the show. It's going to be very informal. I plan on spending lots of time with my crowd, my friends. I'm only going to do one speech. From what I understand, they've only asked me to address the entire crowd once. That leaves me 4 days to address my crowd, which is what I'm really interested in. I'm interested in you guys, and I'm interested in meeting you and getting to see your trading styles, and I'm interested in making our clique nice and tight the way we've always had planned. And so far, so good, guys. Thank you so much on that. If you are going to come to the Money Show, please shoot me out an email at oscarinvegas@gmail.com. Let me know you're coming. I'll be prepared for you. If you'd like to send me a personal email, because most guys want to get in touch with me, or most traders will shoot me out an email, at this point, use futuresanalysts@gmail.com. Send me an email. I'll get right back to you. As you guys know, my viewers, my followers, I answer every single email that comes in personally. Last but not least, 718-351-2266 is my phone number if you'd like to call me. Oh, by the way, guys, traders, I have been asked by many, many, many traders in many different chat rooms, mine, others included, to do a webinar or maybe start a chain of webinars. You know what, guys? I think I'm starting to I'm contemplating, I think I'm starting to lean towards the answer being yes. If you guys would like to participate in a webinar, if you'd like to see me do a webinar, if you have some examples of technical analysis or any type of trading mentality that you'd like for me to cover in a webinar, send me an email at futuresanalyst@gmail.com. Let me know what you think. Let me know what you'd like to see. Let me know what you're willing to pay for to come to my webinar. And we'll see what happens. I believe I can't do it without charging some kind of fee. That's what I've been told. None of that's in my hands, guys. I'm just going to show up and give the goods. The management behind me, whatever it is they set up, they'll set up. I'll certainly keep you informed on how that goes. But anyway, shoot me out some emails. Let me know give me your response. Would you like for me to do a webinar? Would you attend my webinar? Based upon your replies and what the attendance may be, I'll decide whether I want to do one or not. Okay, traders, I hope you had a fantastic week trading. I hope you have a great, great holiday weekend. I've enjoyed my day off immensely. I hope you have. Let's see what Omni brings us next week. And don't forget, stops. Where do they belong? Stops? Stops are in. They get placed first. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.